everybody, it's Brian Shannon from AlphaTrends.net. I had recorded this earlier, but the audio wasn't working, so this is take two. The market had a great week, and it is a fantastic year so far. The biotechs are up 10.5% this month. The semiconductors up 10.3%. NASDAQ, if you rounded it off, it would be a 10% gain. So just some incredible movements in this market. Hopefully you're participating. Let's take a look at the indexes, and then we'll look at some Bitcoin and Ethereum. So this is our market right now, looking at a 30-minute time frame. Each one of these candles represents 30 minutes worth of data. So we're looking at it from the beginning of the year. Here's our volume weighted average price year to date. We're well above that. And I've also got a week to date volume weighted average price that we did flirt with a little bit this week, but we maintained above this rising 5-day moving average. When it comes to the 5-day moving average, you always want to trade in the direction of that 5-day moving average unless you're some kind of intraday super scalper mode. The market, the path of least resistance, obviously continues to move higher, and we are getting stretched to the upside, but that doesn't mean it can't continue. People have been trying to pick the top of this market for years. At the beginning of this year, people said it was going to pull back because it was a new year and that sort of thing, whereas our approach is always the same. It's based on price. Our job is to assess the risks and trade based on the low risk entries within a primary trend. On this weekly time frame, we're really getting stretched to the upside, and the monthly time frame is actually looking pretty ridiculous here, but that doesn't mean it has to go down. You can see even in the after hours here, prices continue to appreciate for the S&P 500. So next week we'll be looking at first this 284-ish area to be the first area of potential support on a pullback. I don't think that the market is likely to experience a stronger correction, but if it did, the way that it would occur would be something most likely like this. Maybe come down, test that 5-day moving average, come down through it rather, and then trap some early shorts in there, but then the market would have the opportunity to rally up, find some resistance at a 5-day moving average, which begins to flatten out, and then perhaps we could see a deeper pullback, and we would be looking at things such as the volume weighted average price from this move as a potential level of support, and if that failed to hold, then perhaps the year-to-date volume weighted average price. The year-to-date volume weighted average price would most likely line up with this 20-day moving average, which is rising as well. So buyers remain in control, and shorts are getting crushed. The NASDAQ had a couple of volatile days here on Wednesday and Thursday, but obviously today the buyers regained that momentum and pushed the market to another new all-time high. I had sketched this in earlier on the previous video, but this is, again, it's not a call for any type of downside movement, but this is how it might occur. First, it comes down to maybe even through that 5-day moving average. The 5-day moving average flattens out, and then if it were to be trapped underneath the 5-day moving average, then we would look for the possibility that it could come down as low as the volume weighted average price year to date, which is down at 165. That wouldn't hurt the primary uptrend. It would be a pullback within a longer term uptrend, of course. So by the way, we're looking at a 30-minute chart here. Each one of these candles represents a 30-minute segment of time. So the 65 period moving average is our 5-day moving average. The math behind that is pretty simple. Each day the market's open from 9:30 to 4 p.m. Eastern. That gives us 13 30-minute segments per day. Over the course of 5 days, we have 65 30-minute segments. So the 65 period, when the periods are 30 minutes, is equal to a 5-day moving average. If we look at a 15-minute time frame, we double that. It becomes 130 periods. The Russell 2000 kind of underperformed a little bit, but it is still clearly in an uptrend. It's above the rising 10, 20, and 50-day moving averages. It's been kind of grinding higher as opposed to the runaway trends of the other markets. Year-to-date volume weighted average price is down at, let's take a look at that together, at 157. I think though that the the first important level is found where this trend line was found. But, if we break the trend line, it wouldn't be a big deal. We would come down here and this would be potential support. And then possibly, looking for what would be an opportunity for a deeper pullback would be if it broke down, found support in here, bounced up, and found resistance at that 5-day moving average, which would begin to decline. Until it does that, all of these markets remain innocent until proven guilty. The semiconductors this week pulled back almost all the way to the year-to-date volume-weighted average price and to this prior resistance where we had seen twice that it had been rejected at about 104, but the buyers did regain control. This gap up and failure was when Texas Instruments reported earnings. Today, it was Intel that reported earnings. So we are in the middle of earnings season, and you have to be aware of that. People thought the semiconductors were done in the fourth quarter of last year, but I've maintained that we remain bullish because we're above a rising 10, 20, 30, and 40-week moving average. The corrections are likely to be, found maybe down towards 100, but again, we're in a primary uptrend. It does not make sense to short this type of strength. The biotechs are in a great uptrend. They saw a new high this week, and if we're going to see, and there's no reason to expect they would do anything but continue to move higher. We broke beyond the resistance that had been back in late 15 and then middle of last year, end of last year. Now I think that, we don't want to chase the strength. You always have to ask yourself, where has it come from, and is there a low risk, high probability place to get involved? If you were to get involved here, you might want to set your stop below 115-ish. I think the better scenario, what we would like to see, would be for it maybe to continue up a day or two and then pull back sometime next week near this 114.5 level, where prior support will have the opportunity to prior resistance rather would have the opportunity to become support on a pullback, and we would assess how that level is defended. So those are our equities indexes. We continue to find low risk, high probability trades in the market. This week we got involved in PSTG. We purchased that stock right here. We sold a third of it, and we remain long PSTG. We also are long GMED. What you'll notice is what's the direction of the 5-day moving average when we enter. We enter right here, and we are still long 2/3 of our position. Let's take a look at how that translates over into the cryptos, because Bitcoin, for instance, Bitcoin right now is 4:51 Colorado time. In 9 minutes, we get a new daily candle. That is 7 p.m. Eastern is when the new candles form. Let's look at that daily time frame. We're below a declining 10, 20, and declining 50-day moving average. We've seen that this prior prior support in here has become resistance, and now we are in we're still in pullback mode. The key, I think, for making a swing trade to the long side in any of these cryptos or otherwise is that we want to see the market make a higher high above a flat to advancing 5-day moving average. So is this right here qualify? No, because this strength here occurred with a declining 5-day moving average. If instead the stock had Bitcoin had done something like this, then that would have been a purchase right in there. This is a funny little drawing tool, but anyways, right now I think that we want to monitor Bitcoin for a move probably above 118.50-ish, and the way that it gets there would be more important. Right now we can see that the 5-day moving average is still declining. We're going to get rid of the data from 5 days ago, which is over here today. So that means this 5-day moving average will flatten out and begin to rise. We then want to buy a higher high above it, but we don't want to chase. We'd rather see it do something like this. Let's take a look at Ethereum as well, because Ethereum has clearly been the strongest of the cryptos recently. The major cryptos is what I like to refer to as the rebels. Are for for Ripple, E for Ethereum, B for Bitcoin, and L for Litecoin. Those are some of the largest capitalized ones. But look at Ethereum. The daily chart, we're below a 10-day and 20-day, but we still have a rising 50-day moving average, which has been holding as support. And this market is looking like it's got the best chance for continued upside. What we need to see happen, let's take a look at this chart right here. This again shows a 5-day moving average. We have 120-minute candles here. So in this case, with a 24-hour market, when we're using 2-hour charts, that means there are 12 candles per day. So this chart right here, this moving average, if I was to well, I don't know how to click. I won't do that right now. Anyways, it would be 12 times 5. So 60 periods is equal to 5 days in a 24-hour market. What we've seen is we've seen the Ethereum get above the 5-day moving average, but the direction of the 5-day moving average was lower, so we don't trust those. This 5-day moving average is starting to flatten out now. If it can break this little downtrend line and also get back above this little peak right here at about 111 and change. I don't know why this, I've got to figure out this drawing tool a little bit better. Let's do this and make a horizontal line instead. If it can get back above here, it doesn't want to do that, then it has the potential to continue to move higher. So we will be looking for, perhaps a little rally up to this level, and then for it to, rally up, pull back a little bit, and then I think you've got a good opportunity to buy it above this peak with a stop underneath the most recent relevant higher low. At this point, that would probably mean about 975 or so. Let me show you something else real quickly, because a lot of people talk about Ripple, the R in the Rebel, and the symbol is XRP. Ripple, let's look at the 5-day moving average here. Look at how this strength, how when we had a rising 5-day moving average, it pulled back below it briefly, but every single time it continued to rally higher until the direction of the 5-day moving average right here at this point, until that 5-day moving average started to decline. Once it began to decline, money was clearly flowing out, and it was then guilty till proven innocent. It got above the 5-day moving average, but the 5-day moving average was declining. Guilty till proven innocent. The 5-day moving average is still declining, so we do not trust the rally attempts. Where were we 5 days ago? 1, 2, 3, 4, 5. So we're going to get rid of this data right here in the next few hours. That means in about 12 hours, or about halfway through this next session, that means that as we get rid of this data, that 5-day moving average will not only flatten out but begin to move higher as long as we're above this level. So Ripple is worth keeping an eye on. Maybe it does something like this, where it comes back to that 5-day moving average and breaks beyond it. Anyway, I hope you had a good week of trading, and don't forget, Alpha Trends is having a sale that is valid through February 4th, and the gold annual subscription is $5.99, normal $7.99. The annual silver is $4.49, normally $5.99. So take a look at alphatrends.net for details, or send an email to express your interest to support@alphatrends.net. Thanks for tuning in, and have a good weekend.